Hi, this is Zak Mir from Master Investor. We'll look at some bulletin board hero stocks on Thursday, the 19th of March. Starting off with Gulf Keystone, where there's been obviously an extended decline below the 40 pence level going into February and March. Possible double bottom here below 40 pence and the recovery of the old October 42 and a quarter pence floor. That's the possible first sign of a sustainable recovery here. What we'd want to see is really a weekly close back above the October floor, maybe also a clearance of the 50-day moving average on at least a 2-day close basis. We failed after a daily close at the end of February. Overall, triangle formation here, top of the triangle towards 55 pence. So that could be the upside from current levels. The stop loss on going long just below 40 pence, but still a bit too early to say that the stock is finally back on its feet. Another stock which has been in the wars of late, Gulfsands rather, petroleum. Here we've got a rebound off a slightly higher low than December, which is encouraging. 21 pence was the low then, and sort of 22 pence for March. So that is a possible start of a rebound there. It's possible to draw an uptrend line here from December as well in the RSI window, which has been bounced off, so that could be taken as a plus too. What you really want to see now is sustained price action back over the old January support, 24.62 pence, and that could lead the shares back towards the upper 30s or even 40 pence over the next month or so. But it's still, as in the case of Gulf Keystone, it's still a little bit early to sing victory in terms of the rebound argument. Another stock which there have been many false dawns over recent past is Minoan. Finally looks to be getting back on the right track. This is set on the basis of the break above the 50-day moving average, 9 pence, 9.06 pence. Uptrend line in the RSI window as well, running towards 30 from the end of January. And also the way that this old support on the way down in October and December at 10 pence has been recovered. View at the moment is that looking at a sort of optimistic, on an optimistic basis, you'd say that while above 10 pence, the shares could hit the top of this broadening triangle formation from July up to 16 pence over the next 1 to 2 months. Probably the ultimate stop loss on the bar argument at the moment would be back below the 50-day moving average, which is very often the line in the sand between regarding a situation as being in recovery mode or just a flash in the pan. Stock which I've been looking at several times over the recent past and is starting to come good in terms of delivering what may be a sustainable revival is Touchstone Gold. The base really here around the 0.5 pence, 0.45 to 5.5 pence level. A little bounce in the RSI indicator and a bounce off, an extended bounce off the floor of this rising trend channel from October. That's running at 0.43, which is the 20-day moving average, and while above that, aggressive traders may be looking for a return back to the top of the range, 0.8 pence, 0.9 pence over the course of April. Be cautious on the shares, want to see more evidence of recovery, maybe wait for an end of day close back above 50-day moving average at 0.52 pence as a momentum trigger. But this area here, this March price action to date, does look to be quite encouraging. That's it from me. More updates at masterinvestor.co.uk.